All right, welcome to the Swiss Mining Institute in Zurich. We're having Shawn, the CEO of Dolly Varden Silver Corp with us, and I'll go a little bit into our current macroeconomics. Gold has been the talk of town in 2025. It's reached all-time highs. It's used as a safe haven for a lot of investors to, escape the inflation and all the geopolitical situation that's happening right now. But there's also been a lot of hype in rare earths, in copper companies, because of the electrification, the whole AI boom. However, silver is has a dual purpose, and we'll talk about that today. And so, Shawn, my first question for you is, I've seen that your stock, has kind of mimicked the silver price. I'm not sure if it's just a coincidence, but you are an explorer and not a producer. But do you want to expand on that and at the same time just go into your company, maybe a little pitch of what you guys do?
Sure, yeah. In terms of our correlation to the silver price, historically, we've actually outperformed the silver price by about 3 times. Now, that's when a market is really efficiently working. We've been in a depressed market, but no, it's a pretty amazing. If you look at the SILJ, if you look at the spot silver price, if you look at Dolly Varden, there's a definite direct correlation. What's really interesting is we're only now getting into a market where the equities are outperforming the metal. And that's a really good sign of the market that's maturing, that's beginning a bull phase. And then in terms of just high level on the project, look, we are a very unique company amongst a very rare group of companies. And, silver is something that silver deposits are very, very hard to find. There are only 33 silver deposits in North America that have more than 25 million ounces, whereas there's 170 gold projects that have more than 750,000 ounces. So silver is in a lot of ways like more scarce than gold in terms of pure primary silver deposits, and that's what Dolly Varden is. Dolly Varden is now 5 past producing mines. We're in the Golden Triangle, so it's an area that 1.2 billion ounces of silver have been discovered, 150 million ounces of gold just in the last 30 years. So it's a safe, high-grade project. We've got big resources, about 150 million silver equivalent ounces. And the company is, it's well-financed, it's well-owned, and has a lot of catalysts coming.
Right. And in 2025, I know you've grown a lot from, I think your package was around 15,000 hectares to now around 100,000 hectares. Can you go over those acquisitions and, the strategy behind that?
Yeah. So the strategy, the vision for the company started about 6 years ago. I came in as CEO in 2020, and we came in at a time where silver prices were $16. So the idea was the large companies did not have the incentive to explore or develop. So we wanted to lock up that mineral inventory for future production. But in order to take a company that was valued at $20 million, that we saw the market cap go to over 600 million this year, that type of growth, we couldn't do all the initiatives in day one. It would have been too dilutive. So we had to be systematic. And so this was a year where we decided to list our shares on the NYSE American, where now we've seen $2.8 million of daily liquidity. That's 4 times the Canadian market. And so on the back of that increased liquidity, on the back of the silver price moving, we did 3 acquisitions in a 10-day period in May. So this was all deliberate, this was all planned, this was all something that we had been looking to do for 5 years, but we executed it in a 10-day period on the back of the market moving up. On the back of that, we've raised a total of $63 million this year. And we've also launched the biggest drill program in the company's history, which was 5 rigs, 56,000 meters, and of which we still have 90% of the assays pending.
Right. How important, is it to have size? Because I know you've grown it so much in the junior mining industry. I know, we look at high quality or of silver, but for size, talk about that.
Yeah. I think size matters. It matters in terms of market cap, liquidity. We're in a world where 58% of money is passively managed, And so, whether it's an ETF, an index, that's what's going to attract capital. That's what's going to give you the valuation. That's what's going to enable you to move your business forward. So size matters in terms of not just project, but it also matters in terms of, the corporation. But getting back to project size, look, when a large mining company is looking to get into an area, they want to make that large investment and they want to ensure that they're going to be there for decades. And that's why we've built up the big land position. We're going after big resources in an area that's, got some of the biggest mines in the world. And size is very, very important.
Right, and we are talking about your name is Dolly Varden Silver, but you also have some really good gold intercepts that you recently had. I think 122 grams per ton gold, right? Over 2.85 meters. Can you go over those results? I think they're pretty recent, right?
Yeah, so I heard something when I first got into the industry over 22 years ago, and I heard what starts as a silver mine has the potential to become a really big gold system. And there's reasons for that. There's different melting temperatures in the metal, and often for the explorers, the silver leads them into that heat source, which could potentially be these big gold systems. That has been the consistent narrative in the Golden Triangle. If you look at Eskay Creek, if you look at Premier, Brucejack, and Dolly is now shaping up to be a very big gold system. We're telegraphing, we're forecasting a new mineral resource estimate where you're going to see a 50% increase to the silver ounces. This is really important for me. This is a silver-centric business. I want to keep it silver-centric, but we are finding these big gold systems because our project goes from being primary silver to silver and gold, and then it goes gold dominant. So you're right, like the last two press releases were primary gold, where we had 26 grams of gold over 14 meters, which included the 2.8 of 122. And what's really interesting is on our website and in our corporate presentation, we show an image of our drill core, and we show that image of the drill core next to a sample from Ascot's Premier deposit from the 310 level. And the reason I mention that is one of our ways to fast track this into production is to get our ore into that Premier mill, which is currently on care and maintenance, and that is hungry for deposits.
Right, totally. If we shift a little bit towards, when the management team came in, I think you were around 20 million market cap. Now you're around $500 million market cap. What's been the secret behind that, and how did you move from probably more of a retail stock to now more institutional? Because I know you have Fidelity even in the deal, right?
Yes. Yeah. Look, our team has worked like really hard, and we've taken advantage of like a situation when we first launched. We got into a very good market, and on the back of that good market, we raised $27 million, and we didn't spend it. We held it and we waited, and then we used it to make a significant accretive acquisition where we tripled our mineral inventory. So really, if I look at the business and go, why has it grown? Why has it been successful? It's been on the 3 pillars. So it's been on raising $185 million. So it's getting that capital from investors who understand that the mining industry is a capital-intensive industry. It's also an industry that takes time. So you need to have that long time horizon so that you can build value and you can build the business. So the money was very important. The acquisitions, we did 5 acquisitions. Those are an important pillar of the business. And actually, as I look ahead at how we're going to continue to grow this business, we're going to continue to acquire. And this time, we want to focus on looking at trying to get some operations into the company. But the third part of it is the science and the discovery. And so you got discovery, acquisitions, and capital. And look, you needed great geology. You needed to be in the right systems, which we have. And there is, I don't know if you want to use the word luck, right? But there is something about taking advantage of timing, right? And so when the market pulsed up, we filled the till. When the market pulled back, we bought. we've always tried to play from a position of strength. Like right now, we're just an exploration company, but we have $64 million in the bank. And that makes us attractive in a lot of ways, because for other companies who are looking to leverage that treasury or to leverage our ounces, but it all comes down to the people. Like, we've got a very strong technical team, a very strong board of directors. And, I think the people are the ones that are making those decisions, particularly for early stage companies that are non-cash flowing. It's really the jockeys that make the difference.
Yeah, you talked about luck a little bit and timing as well, and the fact that you did some acquisitions at a silver price that was probably around $35, I think, in May. If I'm not wrong, that's where it was at. Right now, we're like over $50. How does that work? Like, do you kind of wait and then pull on the trigger when it's ready to go, or?
That's a really good question. Yeah, look, we wanted to be aggressive. We wanted to get as much under ownership before the market turned. And but again, if you look at some of it, and as I look back, there is a little bit of luck involved in that timing. Like, we were in a $25 silver environment in April where we executed all those deals, and a few months later, we're twice the price. And those deals would not have gotten done on those same terms. So, again, we did the work to put us in a position to make those deals, and we're continuing to do that work. And there is still a lot of opportunities. There is still a strong disparity between commodity price and equity valuation. And if you are a company that is trading at our valuation and getting the liquidity, we're still in a have and have not market. And capital is not evenly distributed to all companies. So we could take advantage and continue to grow and continue to build. And then there's something else that's happening where a lot of my peers are in their 60s and 70s and historically are looking at prices going $4,000 gold, $50 silver. We're happy to sell and to move on, whereas we have a young team that has a belief that what's causing metal prices to rise, those problems have not been solved. Therefore, we think we're still going to keep appreciating. And look, what I've experienced in 22 years in this business is it's 2 steps forward, 1 step back, So again, and that's why we have that treasury, so that if the market does pull back, and we are in a correction right now, is it a 15% correction? Is it going to be a 25% correction? We're never going to pick bottoms. We have identified a number of opportunities we want to move on, but again, in our past, sometimes it's taken us 5 years to execute a transaction. At other times it's been faster. But what's good about Dolly is there's multiple fronts of the business we're running on, and it's really simple. I've had some incredible consultants and advisors around me. I've had incredible investment bankers bring me a lot of money, and that money I've forced my scientists to put into the ground, and good things have happened. And so we're making discoveries, we're making acquisitions, and we're having success on multiple fronts. And for the first time in 12 or 13 years, people care about silver and gold.
For sure, yeah. And you just talked about, discovery, acquisitions, but earlier on you said one of the goals would be to bring in operations. What does that mean? More developing or even?
Yeah. So, I've turned my mind to this idea that, I've been around for a couple decades, and there's projects that when I first got into the industry that were discoveries are still not in production. And I was thinking about how I can protect my shareholders, how, regardless of what happens, we can be successful. And what I think where failure could come in is if we don't get our project into production this cycle. Because then where are we? We're on the other side of the cycle and we haven't developed, we're not operating. So I think it's critical that we get moving quickly. And in order to do that and to do it in a way that's less dilutive, the answer that I've come up with is to try to identify a peer that I can merge with and use their cash flow, an operating peer, so that I can quickly develop my project. So that's what I'm trying to accomplish. That's one of the goals. That's something that, as we do due diligence and as we look to enter agreements, that's something that may or may not happen. What I can say with certainty is that we will be delivering 80 drill holes. We will be drilling 65,000 meters next year. We do have $64 million in the treasury. We do have 150 million ounce silver equivalent that I think could potentially go to 200 million ounces in Q1 with the new MRE. So those are things that we know are happening. But in terms of M&A, and look, if we did an M&A transaction, we'd want to do another one and another one and another one, and we'd want to keep growing and keep high grading that portfolio. If you look at successful companies in our space, Agnico, Newmont, First Majestic, they're constantly divesting and investing. It's the name of the game. It's the buy and build strategy. Dolly Varden is in the Fiore office with Frank Justra. It's a strategy that Frank has employed his entire career very successfully. So we're not recreating the wheel here. We're just trying to leverage the good geology and the good fortune and timing that we've had in order to really launch a bigger business.
Right. And so buy and build, obviously, like your goal is to eventually build, or that would be through mergers with bigger companies and having all the capital to really develop that. I want to know, what's your main asset right now? The one you're focused on, is it the Kitsault Valley one?
It is. So it's interesting because when we went out and did like 3 deals in 10 days, I had some shareholders call up and say, have you lost your mind? What are you doing? And you can fail if you're not focused. And so we have not spent any money on those new acquisitions. And we really are looking to, we're just focused on this like narrow 5-kilometer trend. And it's where 99% of our resources are going. And so we call it the Kitsault Valley trend. It hosts the Homestake deposit and the silver deposits that include Torbrit and Wolf. And so that's where we're focused and where we're looking to add value. And there's a direct correlation to positive discovery news and share price appreciation. Looking back at November 10th, our shares were up about 8%. Now, gold was up $100, silver was up $1, my peers were up 3%, we were up 8%. That extra 5% was on the back of the discovery. So we're getting paid to discover. And the other thing that I haven't talked about, and I'll just touch on it, is if our MRE, if our mineral resource estimate that has 1 million ounces of gold, has 100 million ounces of silver to complement that 1 million ounces of gold, there are silver mining CEOs like Keith Neumeyer, who's running a $10 billion company, who has $600 million in the bank, who has said, we're looking for 100 million ounce silver deposits. And so the other thing that's possible for us is for us to be a takeover candidate, right? There's 10 primary miners. There was 13 this time last year, but we've seen 3 M&A deals in the space, and you're going to see more. And so what I'm trying to do is I'm trying to build that business so that we don't fall victim to being prey, that instead we're predator and we build. And I think that'll actually just make us even more attractive for even larger entities.
Right, 100%. What milestones, should investors be looking out for in 2026 or even closer than that?
So I think we're probably at a cadence where you'll see another drill result in the coming week or two. And then again, we are working hard on the M&A front. So, we'd love to daylight a deal before the end of the year. But if I look back to 2025, 3 acquisitions, $63 million in raises, 56,000 meters drilled, NYSE listing, it was a big year.
Yeah.
And if we can end the year with another discovery and another M&A transaction, this will be the biggest year we've had in the last 5, by a significant margin. In terms of 2026, we're looking at a $27.5 million spend, a 65,000 meter drill program. So again, more growth, more discovery-oriented drilling, and just continue to make acquisitions and grow the business.
Right. It must be a little bit stressful, at least, because you had such a good year. So managing expectations might be something, 2026, if there's a little bit less M&A. How do you really manage those with your investors?
Yeah, listen, I remember when we first had a really significant drill hole, 2021, 2022, I thought, wow, like, how do we, the tough thing in our business is when you come out with a big number, if the next one isn't as good or better, you run the risk of losing momentum. And that was a real fear that I had. But, after consistently in 23 and in 24 and then in 25, I'm getting some confidence in the project where it's a good project, it's got good grades, but also it's also important to try to diversify with other projects so that if for some reason we have seen the best this project has to offer, because it is exploration, it mitigates that risk. And we're not taking on that move at a $20 million valuation. We're taking it on at a $500 million. So, it's about like mitigating risks, but still, taking shots. And I think the biggest message I'm hearing from shareholders is be bold, be aggressive. This is the time.
Yeah, 100%. So you did talk about, your experience. You've had a lot of experience up till now, and that's what kind of helps you get through it because you've seen those things before and you've managed expectations before, like you said, with your first drill hole or one of your really good drill holes. Talk about quickly how you started. Like, how did you get into this industry? What's your personal story?
Look, I just started. It was a job. If I'm, being completely honest, I was 22. I was looking for a job, and I came into an investor relations role for a startup gold mining company, and I worked for a geologist, and the gold price took off. It went from 300 to 1900. We had success. I worked for a great leader for 6.5 years, a great scientist, a great miner, and our company went from inception to $1.4 billion market cap, and I was sort of the number 5 guy in the company that was working for like a wonderful group of grandfathers and fathers and people that were good people and had good values. And so I caught the bug, right? And it was exciting. And then I was taught by these mentors to invest. That to even take, I remember my first investment was $600 and to invest. And those investments, like I made an investment in silver in 2010, in April of 2010, that went up 11,000%. And so the reason I went to Dolly Varden was because of those lessons. And it's less to do with my experience, and it's more to do with the people I'm surrounded by. And it's not just the people that are in the company, it's having the right advisor. It's having the right banker, because those bankers are committed to ensure that the investors that they've put into the company, that the company is doing the things to continue to grow the investment. So having this ecosystem of great shareholders, great bankers, great advisors, great scientists, and having a project that works, and I know how rare this is. The parallel that I'll talk about is like a sports analogy. When you have a winning team and you have the potential to make a deep playoff run and potentially win a championship, it doesn't happen for many, and it may happen once or twice in a career. And so when you're in it, I didn't understand it in that first cycle in gold. I didn't appreciate it, but I do now. And I know it's rare. And I'm also, that company I worked for, I left after 6.5 years. They changed management. When I left, they had $100 million in the treasury and they had $1 billion market cap. They were $1.4 billion, they had $1 billion. It ended up going bankrupt after I left. So the lessons that I'm learning and the things that I'm doing are to try to mitigate that failure I've seen so many times in this industry. And again, not being afraid to fail. Like, investors aren't giving me money because they want 4% returns. Like, I've got Eric Sprotz invested $25 million and he said, Shawn, go make me 20 times my money. So I've got to swing, but I've got to be like Ted Williams and only swing when it's in the strike zone. So that's like, it's having those lessons. And again, good geology, high metal prices are the key, luck, timing, but hard work, good people.
Right. So there's obviously a lot of pieces to the puzzle, but each piece like counts as much as the other, right? And I think you've been able to prove that and assemble like the really good team. Is there anything else you want to add to the audience before we end this interview?
Yeah, listen, I've been very vocal about silver, you know, like literally like pounding my fist on tables at times when silver prices were, you know, $20, $16 and making some pretty bold calls. And look, I think there's a risk that, you know, the spot price and the 200-day moving average, there's a pretty big gap, like 39 to 49 is a gap. It's probably the biggest gap we've seen in a while. So in the short term, you know, I'm not making a bold call that, you know, run out and get silver. But again, I go back to why we're still doing this, right? And I go back to, we need to ask ourselves, why is gold $4,000 an ounce? Like, what's happening out there that's causing people to lose confidence in governments, money, the system? And in the case of silver, historically, you know, the relative value to silver to gold, you know, it's 2% up to 4%. It's 1.27% right now. You know, the other way to express that is it's an 80 to 1 silver to gold ratio. So I really think that if you're, you know, a lot of people, like, they point out the problems. I think the solution is investing in silver, because if you look at all asset classes, you look at different sectors, whether it's tech, you look at like something like crypto and you see what is happening in that space. You look at real estate. You know, if you were to buy a home, I'm from Vancouver. If you go back to when I started at Dolly Varden, if I wanted to buy a home in Vancouver in silver, it would have cost me 64,000 ounces to buy a home. Today, it's 15,000. Home prices have gone lower, silver has gone higher, and so one could have bought four homes today for what one would have cost 5 years ago. So it's about relative values. So all those management teams that are happy to sell their silver deposits at $50 because they think historically this is a high price, it is nominally, but not on a relative basis. And so I really think we're in an environment right now where I'm here talking to you in Zurich. I met with dozens of people here, and we were in London just before it. Smart money is setting up silver-focused investment vehicles and allocating heavily to the equities. It's a market that's had a consistent 200 million ounce deficit for the last 5 years. And it's, to me, you've got industry wanting more of the stuff. You've got investors waking up to it. And, you know, it's the reason the price has moved 100% this year. And it's why I think it's going to continue to go. So again, you know, you're not investing at $16 like the investors that backed me on day one. You're investing at a higher nominal price. But in some ways, silver is cheaper today at $49 than it was when Warren Buffett bought it at $4, if you look at it from a relative perspective.
Right, and you said it well, you know, someone like Eric Sprott is not looking for a 4% return. So for any investors that are like looking for, you know, a little bit higher risk, but if you believe in the commodity, if you believe in silver, take a look at Dolly Varden Silver Corp, ticker DV on the New York Stock Exchange.
It's DVS on
DVS.
New York and DV in Canada.
Right, DVS in New York and DV in Canada. All right, well, Shawn, good to have you with us. Thanks so much.
Thank you very much.